Have you ever tried to figure out how to calculate your gold lot sizes without blowing up your account? In this video, we're going to talk about how you can calculate your lot size without wasting a whole bunch of time going to different calculators and trying to figure out if the number is correct and possibly typing in the wrong thing and accidentally blowing up your account. That has happened to me a couple of times. So that's why I wanted to make this video, so that way you know exactly how to calculate your lot size from scratch. You may be wondering why you need to pre-calculate your lot size anyway. Well, the biggest reason is because you want to be able to save your account. And let's just say, for instance, if you had an account that was $10,000 and you wanted to risk 1% per trade, then 1% of $10,000 is going to be $100. But how do you know that the number that you type into the platform is going to be exactly $100? Well, that's why we're going to go through a really quick and simple calculation in order for you to know exactly what lot size you need to type in order to meet the amount of money that you actually want to put inside of the market. So now we have the formula that I use in order to calculate my lot size on gold. And this formula is going to be slightly different from the formula you may see when you Google it. So when I was looking for the formula years ago, it didn't make sense. It always felt like it was off, and now I figured out, putting my math minor to work, what was wrong with it, and I figured it out. So here is the formula here. If you are tired of missing out on gold, in this blueprint, you're going to get an easy to follow profitable gold trading table, as well as profitable entry levels and strategies. And basically, if you've tried to decode things like FOMC, geopolitical events, you may have tried without much success. And in this blueprint, you're also going to master simple strategies that the big players like banks and institutions follow, and then also be able to spot profitable opportunities, so that way you could avoid some of the common traps that other traders fall into. And then, of course, you're going to save hours of research with a clear and actionable plan inside of the gold market. Just take a look at what some people are saying about this, and just so you know, when this clock runs out, the price of this will increase. So go ahead and grab your copy of the Profitable Gold Market Blueprint today. So basically what you're going to do is you're going to take the lot size that you want, you're going to figure that out, but you're going to figure out how much you want to risk. So let's just say $100, and divide all of that by the pip value. So on gold, I'm assuming a standard lot. And basically a pip size on gold for a standard lot is 0.10. And we're going to have some calculations. They're going to be super easy. So don't worry if you're not a math person like I am. It's going to be a lot of fun, and it's going to be quick for you as you continue to do this on your own. So next you want to multiply by the stop loss you intend to have in pips. And then you also want to multiply that by 100. So this multiplication of all this stuff in the denominator, so the stuff on the top is the numerator, stuff on the bottom is the denominator, and adding or multiplying the stuff on the bottom by 100 is really helpful, mainly because when I would use lot size calculators on pick any website, it would always be off by a factor of 10. And what I found out is that it's missing a multiplication of 100 on the bottom. So if this sounds confusing, stick with me. But basically, once I figured that out, I realized that this was the best way to calculate my stop loss. All right, so risk amount, we talked about that. How much money you're willing to lose. So typically what I do is account size multiplied by how much I want to risk. So let's just say we got a $10,000 account. We want to risk 1%. 1% of $10,000 is $100. So next we want to look at pip value. And for gold, I'm looking at this from a standard lot. So one lot, and that's 0.1 per pip. So that is the pip value for gold when you assume a standard lot. And that's another piece of this calculation that I modified as well. And then the other thing is stop loss in pips. So typically I like to have like 50, 60, or somewhere between like 35 and 60. Let's just say stop loss. It just kind of depends on what's happening in the market, what sort of profit target I'm looking at, and some other factors. But let's just say that we wanted to use a 50 pip stop loss, then that's going to go right here. And this is going to be the distance between where you enter and where you could potentially get stopped out at. And I'm sure all of us are familiar with that. So I love this formula because it accounts for multiple things that we care about inside of trading. It's how much we're risking. It's what is the pip value on the particular market that I'm trading. Like I said, this is for gold. You can try this on other markets and just see how it works out. And just let me know how it works. But this is what I use for gold. And then pips, a stop loss is going to be in pips. So it accounts for that. We are accounting for our stop loss. We're not just calculating it based on nothing. And the other thing that I found is that some of the calculations that I saw basically wanted you to know what the lot size was before you calculate it. And it's like, that's what I'm trying to figure out. How do I know what the lot size is? Like, I'm trying to figure out. So it was very circular in the reasoning, and that's why I wanted to come up with something on my own. And basically this thing right here, and then assuming a standard lot, was the thing that has given me consistent results inside of the market. I wanted to use this for a while before I made this video, just because I wanted to make sure that it works. And like I said, just using this on gold. Now I want to go through some sample calculations with you, just so that way you have a sense of what you will be doing on your own inside of the market. So let's just take this example right now. We have a $5,000 account and we want to risk 2% and have a 50 pip stop loss. So 2% of a $5,000 account is going to be $100. And then we're going to have this 50 pip stop loss. So the first part, we just do 5,000, our account size, multiply it by 2%. As a decimal, it's 0.02. And then that gives us $100. Easy. So then the next thing we want to look at is the pip value. So like I said, I'm assuming a standard lot on gold. And the pip value for that is 0.1. Got it? And then the stop loss is going to be 50 pips. Got it? So now here we are putting it all together. So we have the lot size is going to be equal to the $100 divided by all this stuff. So it's the 0.1, which is the standard pip value for gold on a standard lot, and then 50 pip stop loss, and then this is going to be that 100 that I wanted to have in the denominator, so the number on the bottom. And then once we do all that, we got 100 divided by 500, and then it gives us 0.2 lots. So that's really easy. So many calculators would give me something like 2 lots, and then I put 2 lots in on gold, and then account blown. So this is so cool. So anyway, so let's do another one. All right, so this time we're going to have a slightly bigger account. Let's say we got a $50,000 account and we want to risk 1% and we have a 30 pip stop loss. So right off the bat, 50,000, that's the size of our account, times 0.01, that is 1% in decimal form, and that's going to be $500 that we risk on this account. So now we have the pip value of gold for one standard lot, which is 0.1. And then we have the stop loss of 30 pips. Cool. So now we just put it all together. So we have the $5,000 that go right here. And then we have the pip value for gold. So that is here. And then 30 pip stop loss here. And then the 100. And then now we have $500 divided by $300, and then that's going to give us 1.67 lots. So very precise using this formula. So those are the examples that I have here for this particular calculation. If you want a copy of your own version of this, so all you have to do is type in 3 numbers. All you got to do is check in the description box below, and I have a free calculator for you, so that way you can use it on your own. It's super quick, and then eventually you'll get to the point where you're doing this on your own without the calculator whatsoever. So it's going to be really cool. You just have to put this into practice. Watch this video a couple of times if you need to, but the math is very simple. I've wanted to keep it simple for you all. because I used to be a math tutor and a supplemental instructor, and I know that math at times can be difficult for people, but it's actually really easy. So take your time, watch this multiple times, use the calculator, you're going to be great. So if you really like this video, then go ahead and let me know in the comment section below that you liked it, what you liked about it, and if you have suggestions on other videos that you want to see in the future, then go ahead and let me know that as well, because I really want to know, and I only want to make content that you're actually going to watch and actually want to learn. So I'm Lakeisha, and I'll see you next time.